Interest rates, the sky is falling. I wanted to put together a little video for you guys just in regards to the interest rates, what's happening out there, inflation a little bit. We'll touch on that. But I wanted to prepare this just because I know there's a lot of uncertainty in what's happening out there. And quite frankly, with the economy and the government, who knows what the heck's going to happen. However, what one thing stands true is that real estate's a local business, local industry. It's all based in locale. So whatever you hear in the media is based on national news, national statistics. What we're seeing here in Metro Detroit is still a strong seller's market. So if you have a home that you're looking to sell and wanting to move, downsize, whatever it may be, it's still a great time to sell your home. Interest rates right now for mortgages are averaging in the low sixes. If you got credit challenges, you're in the high sixes. And yes, it's a tough pill to swallow when rates were in the 3% range last year. And some people even got in the 2%, over the past 18 months. Those rates we're probably not going to see for a long time. They were kept artificially low through COVID due to, people not being able to work, whatnot. So historically, let me share my screen with you real quick. We've seen rates as high as 17 to 18% in the 80s. And yes, you can argue with me that, oh, well, prices were lower, yet affordability still was low. I mean, the average income was less than $50,000 back then. Today, it's significantly higher. I would even argue double that in some areas. So the rates being below 7.75% is still under the 30-year historical average. So again, and two more rate hikes this year is what the Fed is saying. Yet when the Fed is talking about rate hikes, that doesn't necessarily mean that the mortgage rates are going to increase. Typically, what we see is a reduction in rates right after the Fed announces a rate hike, and then they'll come up, but not to the rate that you're going to see short-term debt interest rates on. The other thing to discuss here, stop this screen here, is inflation. So just for some context, say you had $100,000 in your bank account right now, and you were thinking about buying, but you're like, you know what, I'm hesitant because I don't want to buy into these rates. I'm going to wait for them to come down. Well, you'll be waiting a long time. I'll just tell you that, because they're probably not going to see anything under 5% for a long time. But that $100,000 today may be worth $100,000, but with inflation being anywhere from 6 to 10%, which is what the Fed is saying, we're going to look at, you're looking at 6 to 10% less is what your money's worth. So we're talking $90,000 now. So the best hedge against inflation is buying assets. I would argue that real estate's probably one of the, maybe a little biased, but it's one of the best assets you can purchase to hedge inflation. So if you are in the market to sell your home, I'm happy to come out and take a look, give you an idea of what it's worth, and then help you acquire that next asset, move into the new home. It's still a great time. 40% of the market is first-time home buyers. So if you have a home that would be perfect for a first-time home buyer, if it's cleaned up nice, well-maintained, it's going to sell in this market, regardless of what the rates are doing and what the media is telling you is happening. When they talk about the market's low or decreasing, they're talking more so about the amount of home sales that are occurring. So hope this is helpful. I appreciate you guys, everything you guys have done for me and my family. And I'm never too busy for your referrals. I'd love to be introduced to somebody you guys may know who's looking to buy or sell real estate in 2023. Or if you yourself are curious or have questions on this video, please reach out anytime. I'm happy to answer any questions. And I like to think of myself as your trusted resource for life on anything real estate related. So take care. Thank you.